Ever pondered on the current state of Dogecoin? If you have, you're certainly not alone. Dogecoin, the meme-inspired cryptocurrency that took the financial world by storm, has been on the minds of many. It's been a wild ride to say the least, with the coin experiencing a dramatic pullback of 47%, landing it at a key support level of 12 cents. There's a lot of buzz surrounding Dogecoin, and it's not all positive. The daily chart shows weak bullish reversal signs, with resistance at 15 cents and the mid-level of a descending channel. Analysts suggest that if Dogecoin cracks below 12 cents, things could get a bit dicey for the bulls. The overall market sentiment seems to be bearish, with compressed trading volume and declining open interest rates in the futures market. However, the Dogecoin bulls are putting up a good fight, defending the 12-cent support level. But a lot depends on Bitcoin, the big brother of all cryptocurrencies, reversing its recent losses. So that's the current state of Dogecoin, a coin under pressure, yet holding its own. This video will break down an insightful analysis of Dogecoin's price and market conditions based on a recent article. Let's delve into the details, shall we? Dogecoin has experienced a drastic 47% pullback, reaching a crucial support level at 12 cents. This is not just any ordinary level. This is a pivotal point that could determine the future trajectory of Dogecoin. The 12-cent mark is the line in the sand, the fortress that Dogecoin needs to defend to ward off further losses. Now let's delve a little deeper. On the daily chart, we're seeing faint glimmers of bullish reversal signs like a candle flickering in the wind. However, these signs are weak and the wind of market forces is threatening to extinguish this flame. There's a resistance looming ahead at 15 cents, like a high wall that Dogecoin needs to scale. It's no small feat, and it's important to keep this in mind. But let's not get lost in the weeds. The crux of the matter is this: the 12-cent support level is a critical juncture. If Dogecoin manages to hold on to this level, it could potentially stave off deeper losses and provide a base for a possible upward swing. However, if it fails to defend this level, we could be looking at a different scenario altogether. So we're at a crossroads. The 12-cent level is the key. It's the gatekeeper. It's the line that separates potential recovery from further decline. And as we watch the market dynamics play out, it's clear that a drop below this level could complicate matters for Dogecoin enthusiasts. Despite defending the support, the negative sentiment and reduced trading volume point towards bearish market conditions. Now, let's unravel this. You see, in the world of cryptocurrency, sentiment is a big player. It's the collective emotions and attitudes of the market participants. When the sentiment is negative, it means that the majority of traders are pessimistic about the future price movements. This can create a self-fulfilling prophecy, as more and more traders sell their holdings, causing the price to drop. Next, we have reduced trading volume. This is simply the number of coins traded during a certain period. When the trading volume decreases, it often indicates a lack of interest or hesitancy among traders. In the context of Dogecoin, this reduced trading volume suggests that traders are holding back, perhaps uncertain of the coin's future trajectory. This hesitancy can further fuel the bearish market conditions, as less trading activity can lead to price stagnation or even a decline. But wait, there's more. These two factors, negative sentiment and reduced trading volume, feed off each other. The more the price drops, the more pessimistic traders become, leading to even less trading activity and vice versa. It's a vicious cycle that can be hard to break, yet it's not all doom and gloom. Remember, markets are cyclical. Just as night follows day, bearish markets are often followed by bullish ones. The key is to stay informed, make rational decisions, and not be swayed by the prevailing sentiment. Futures market data also reflects a decline in open interest rates, signaling bearish sentiment. The defense of the 12-cent support hinges on Bitcoin reversing its recent losses. Now you might be wondering, why is Dogecoin's fate tied to the performance of Bitcoin? Well, to understand this, we need to delve into the intricate relationship between these two cryptocurrencies. Bitcoin, as the pioneer of digital currencies, has a significant influence over the entire crypto market. It's like the sun in our solar system, and the other cryptocurrencies, like Dogecoin, are the planets revolving around it. When Bitcoin sneezes, the entire crypto market catches a cold. So, when Bitcoin experiences a downturn, it's not surprising to see other cryptocurrencies, including Dogecoin, following suit. But why is Bitcoin's reversal of loss crucial for Dogecoin's defense of the 12-cent support level? Here's the thing: Bitcoin's market performance tends to set the tone for investor sentiment across the crypto market. When Bitcoin is on an upward trajectory, it often boosts confidence among investors, leading to increased investments in other cryptocurrencies, including Dogecoin. So if Bitcoin were to reverse its recent losses, it could create a ripple effect across the crypto market. This could potentially lead to a surge in investments in Dogecoin, thereby helping it defend the 12-cent support level. However, it's important to note that while Bitcoin's performance can influence Dogecoin, it's not the only factor at play. Other elements such as market sentiment, trading volume, and even global economic conditions can also impact Dogecoin's value. In conclusion, while Dogecoin has its unique characteristics and value proposition, its performance is, to some extent, influenced by the movements of Bitcoin. So, for those keeping an eye on Dogecoin, keeping the other eye on Bitcoin may not be such a bad idea. The fate of Dogecoin, it seems, is intertwined with that of Bitcoin. So what does all this mean for Dogecoin? Well, let's take a moment to reflect on what we've covered. Dogecoin has been experiencing a bit of a rough patch recently, seeing a 47% pullback. This has brought it to a crucial juncture, the 12-cent support level. This key support level is significant because it's essentially a safety net for Dogecoin. If the price falls below this point, it could spell trouble for Dogecoin's bulls, making it harder for them to regain control of the market. But that's not all. The daily chart is showing weak, bullish reversal signs, with resistance at 15 cents and at the mid-level of a descending channel. This means that Dogecoin is currently facing an uphill battle to increase its value. We also discussed the bearish market conditions that Dogecoin is facing. Despite defending the 12-cent support level, the market sentiment seems to lean towards the negative side. Trading volumes have been compressed, indicating that there's less activity in the market. The futures market data also reflects a decline in open interest rates, which signals bearish sentiment and suggests that investors are less interested in Dogecoin. Perhaps one of the most important factors to consider is Dogecoin's dependency on Bitcoin. The defense of the 12-cent support level is heavily reliant on Bitcoin reversing its recent losses. If Bitcoin continues on a downward trend, it could potentially drag Dogecoin down with it. To sum it up, Dogecoin is at a critical point. The 12-cent support level is its lifeline in these bearish market conditions, and its fate may be tied to that of Bitcoin. It's a challenging time for Dogecoin, but it's also a time of great potential. Only time will tell if Dogecoin can hold on to its key support level and possibly bounce back. Until then, keep an eye on the market and stay informed.